Welcome to Capitalize Your Finances, the podcast that's your ultimate guide to mastering personal finances and unlocking the secrets of entrepreneurship. Each week, we dive into the world of personal finance and business development and have fascinating conversations with industry experts, seasoned entrepreneurs, and thought leaders who share their insights, strategies, and stories to help you get ahead in life. Whether you're a seasoned entrepreneur looking to scale your business or someone just starting out on your financial path, this podcast is your go-to resource for inspiration and actionable insights.
Welcome back to Capitalize Your Finances. As always, I am your host, Christopher A. Paniotu, certified financial planning professional, and the Cap in Capitalize. Today's episode is going to be a really exciting one. We are going to go over 8 books that I believe every single one of you should read. But before we do that, and I actually have my stack of books off to the side for those of you that are watching, so you actually get to see the covers. So when you go on Amazon or Barnes & Noble or wherever you want to buy it, you can go and buy these immediately and you'll be able to find it right away. So the tip of the week, and this is a very timely tip of the week. When you do your taxes, as painful as it may be for some of you, take the time to actually read through your tax return and understand why everything happened the way that it did for you in the previous year. This will make you infinitely more aware of your financial situation, and it will make you that much more valuable when it comes to understanding your personal finances. So a lot of people like to complain about taxes, and a lot of people simply don't understand the tax code. And most people, I'm not recommending you just go and become a CPA. That's not what I'm saying. But most people don't even take the time to read their own tax return. And when you do that, you start to understand why certain things are or are not within your tax return. And then next thing you know, you start to understand from a policy standpoint why these things are put in place. Now, whether or not you agree with it, that's beside the point. The point is you become infinitely more aware of what's going on with your money, and that is going to give you more comfort than you could ever begin to imagine. Now, tip is out of the way. I am really, really excited to go over these 8 books. And I also want you to know these books are in no particular order. For those of you, just to give a little spoiler here, that are wondering what type of books these are, because we're probably going to do more episodes like this in the future. But this first go around, they're definitely more investment focused. However, there are some snippets of business in general. There is some snippets of marketing and sales. And then there's even a bonus one on how to understand everything that you read and absorb it instead of reading and forgetting everything that you just read. So the first book we're going to go over is one of my favorite investment books. It is Benjamin Graham and the Power of Growth Stocks by Frederick Martin. Now, Frederick Martin, it's worthwhile knowing who he is. He's a rather unknown investor. He's known within the investment world, but even with that, he keeps a very low profile. He's located out of, I believe, Minneapolis. And I heard about him probably 3 or 4 years ago from one of my previous guests, William Green. And when I saw that he wrote a book after I heard of his interview, I thought, okay, first off, he sounds like an extremely genuine guy. He speaks in layman's terms. I wonder what is in his book. And this book is a phenomenal book for you if you're trying to think of a base place to start of how do you actually value a stock or a business. So a lot of these books out there in the world of investing, they give you all of this theory and philosophical verbiage of what to look for, what to do when it comes to valuing a business. And there is an art to it, but no one really goes over the black and white science. And what Fred's book does is he actually goes over not only examples, but actual real world examples of his own fund of why he invested the way that he did. He went over the analysis, and not every investment was good. Some of them actually didn't do as well. But the point is he's very vulnerable. He's very open with it. And it is phenomenal book to get your feet wet in the world of investing. So thank you, Fred. Now, the second book that we're going to go over, and this is a little older of a book, and it's very well known in the world of investing. It's Common Stocks and Uncommon Profits by Phil Fisher. So Phil Fisher was a famous investor way back in the day. He's long since passed. But what's unique about Phil Fisher, and there could be a little controversy behind this, but if it wasn't for Phil Fisher, I can make the argument that Warren Buffett would not have been who he is today. So Warren Buffett and Charlie Munger, his past business partner, were mulling over buying See's Candy I believe it was in the 70s. And it came down to a very small number that was slightly above what Warren was more comfortable with. But what he did was he actually reached out to Phil Fisher and asked what his thought was. And if it was not for Phil Fisher convincing Warren to basically stop being so cheap and pay up for See's Candy, which, by the way, he paid $25 million for, and in 2024, the business alone did $2.5 billion in revenue. Phenomenal rate of return. If Warren Buffett didn't make the purchase of See's Candy, he probably wouldn't have made the purchase of Coca-Cola, which means he probably wouldn't have made the purchase of Gillette, which means he probably wouldn't have made the purchase of Apple, which means he probably wouldn't be Warren Buffett. So it's safe to say Phil Fisher is an extremely important dude. And what I got out of Common Stocks and Uncommon Profits blew my mind. So we all understand that when it comes to investing, you want to buy a company at a cheaper price, and you eventually want to sell it, if you ever sell it, at a higher price. That is investing 101. However, it gets a little misconstrued because there are traditional numbers and metrics that people use, and they say, oh, by the numbers, a company is really, really cheap. Phil Fisher was the first investor that I ever read about where he argued that sometimes a company is sold at a more expensive price because it actually deserves to be sold at a more expensive price. And it's the whole idea of price is what you pay, value is what you get. I also love how he has 15 steps, and he calls it the scuttlebutt method. I don't know where he got that name from. But if you are trying to figure out not only how to invest, but you're trying to get out of the mindset of just buying dirt cheap companies simply because they're dirt cheap, and you want to understand the value and a quality of a business, Phil Fisher's book is going to be the book for you. Now, moving on to the third one, this is not directly an investment-related book, and for those of you that have been tuning into the show for a while, you've heard me talk about him immensely. William Green, one of our favorite guests, one of my favorite financial authors. Actually, I'm going to go as far as say is my favorite financial journalist author that I've ever read. Richer, Wiser, Happier. So Richer, Wiser, Happier, I would not say it's directly an investment-related book. Indirectly, it's one of the best investment-related books of all time. So William Green, he's not an investor. He's not a planner. He's I categorize him for people that are not familiar with his work as a award-winning financial journalist. And if you actually want to learn more about his life in his career, you can actually go back to the episode where I interviewed him. And William Green took years to write this book. Not only did he take, I believe he said it took 5 years to write this book, which, to give you an idea, my first book took me about 2 years to write. My second book took me significantly less time because I learned the mistakes from the book prior. But 5 years on a book is an insane amount of time. And the detail that he wrote in this book is beyond insane. I could argue this book took him upwards of 30 years to write because he got to interview all of the most successful business and stock investors in the world. And he compartmentalized this all into the book, Richer, Wiser, Happier. So you're not going to get the direct investment strategy like Common Stocks and Uncommon Profits or Fred Martin's book, But what you get to do is you get to go into the minds of the most successful investors in the world, and they all have a different flavor about them. And so what you're going to get out of this book is whoever you resonate more with, you go down that avenue and that rabbit hole of that investor's mind. And what's really cool is all of these people in here are massively successful, but that doesn't mean you have to do what every single one of them has done. So if you're trying to find which investor you relate with the most, and you're also trying to get an understanding of how the most brilliant investment minds in the world work, this book is going to be a lifesaver for you. So William, thank you for writing this. Now, before we ease into the commercial break, this is going to be a slightly different type of book. So this is not an investment related book directly, but this is one of my favorites. Also, it's very, very small and thin. For those of you that are watching, you can see on the screen, The 22 Immutable Laws of Marketing by Al Ries and Jack Trout. So this was referred to me probably a decade ago. And I remember reading it, and the book is not long. It's about 120 pages, but it's big font. There's pictures, there's spaces. So you could theoretically get through this book in a couple hours in one day, easily. So I read this book the first time and I thought, whoa, this is really cool from a marketing perspective. But other than that, I don't really know why it was recommended to me, other than the fact that it was a really good marketing book, and that kind of is what it is. It collected a significant amount of dust on my bookshelf for years. And then when my podcast and my business started to grow, for whatever reason, I was compelled to reread this book. And I will tell you, if you run a business or if you are a sales professional that is trying to figure out where you fit as far as maximizing your success, 22 Immutable Laws of Marketing is going to be your ticket. So what this book does is it tells you, depending on where you're at in the world of marketing, what you should be targeting. So if you're not the first, what are you? If you're not the XYZ, what are you? And you go down that list. And then once you get to the point of where you are at that list, you obsessively hone in on that law. And that directly will lead to your brand success, your financial success, and your business's success. And I'm a testament to that because I've committed heavily to this book. Now, indirectly, and then we're going to ease into the commercial break here, this is an investment-related book. So for those of you that are into investing and you're thinking, okay, I know how to analyze what a CEO is saying. I also know how to analyze what a CFO is saying, Chief Financial Officer. But chief marketing officers, they I don't want to say they get a bad rap, but a lot of people in marketing, they don't necessarily know how to value what they are doing. Now, you work for a Fortune 500 company, you better have a clue how to value what you're doing or else you're fired. But the reason why I bring this up is when you read this book, and if you're investing on your own, or you are a professional investor or a planner, and you're listening to a quarterly recording on the chief marketing officer and what he or she is saying is of value for the business, you can go to this law of marketing, 22 Immutable Laws of Marketing, and you can know where the business is at. You can hear what the marketing officer is saying, and then you can match it to whatever they are saying in the book. And if they are matching it, you could argue that you could put more money into the company because not only is the financial officer and the CEO doing exactly what they need to do, you know where the marketing officer is in this law of marketing, and you could actually put more money up. On the flip side, if they're telling you something that they may, and I'm going to make this up, they may be touting that they're on the 5th law of marketing, but you look at it and go, well, they're really on like the 10th or 12th or somewhere way down the line. So their marketing goals don't align with where the business is at. That might be a reason, for you to take some gains off the table or maybe walk away altogether. So with that, we are going to take a quick break. And then when we come back, we're going to go over 3 of my favorite investment books of all time and a little bonus one on how you can absorb more knowledge when you read. Stick around.
Are you ready to transform the way you approach sales? This episode is sponsored by the second book in the Capitalize series, Capitalize Your Sales, the all-in-one sales framework that saves you from ever struggling again and teaches you how to sell with sincerity, which dives deep into the art and science of driving sustainable growth. Packed with strategies that go beyond surface-level techniques, this book will help you understand what it takes to truly connect with clients, build long-term relationships, and close deals. Whether you're looking to fine-tune your sales craft or break through to the next level, Capitalize Your Sales offers a roadmap to success designed for today's fast-paced business world. Head on over to your favorite bookstore, order today, and start capitalizing your sales immediately. And now, back to the episode.
Welcome back to the show. We're going to rip right on into the next 4 books that you should be reading. So this one, How to Invest by David Rubenstein. This book was introduced to me, I think it was a year ago. The last couple of years have kind of been a blur. That's what happens when you have kids and you're going through a remodel and you're writing books and all these fun things. I digress. How to Invest, directly speaking, is not an how-to investment book. Indirectly, it is a planning book. And I'm going to get to that in a second. So what Dave Rubenstein did, and just to give you a background on who he is, Dave Rubenstein is one of the founders of Carlyle Group, the Carlyle Group, which was one of the largest alternative investment companies in the world. And they do private equity, they do real estate, they do stock, they've done a ton of stuff. And Rubenstein is, I would say, the kind of the marketing face of the business. And the other 2 are more behind the scenes. So what he did, and it was indirectly similar to what William Green did with investors that were mainly in the stock market. What I like about How to Invest is he didn't focus on just the stock market. Dave Rubenstein went to every investor that he could find that he thought was one of, if not the best investors in a particular sector. And he interviewed them on their mind for that type of investment. So what this book did, it did a couple things for me. It taught me what specific sectors are trying to achieve from a return standpoint. It taught me how to value certain businesses certain investments, because you have to have a different mentality when you are investing a stock as opposed to, say, a piece of real estate or a lending company or a bond, because they all do different things. But and lastly, what was really fascinating was when it came to clients and how I personally grow their net worth, it got me to be much more focused on what I need to do for someone that is growing that net worth to the best of my abilities, maximize their return. Now, if you are trying to figure out what different sectors are going to earn from a return standpoint, this is going to be a fantastic book for you, because Dave Rubenstein, by interviewing all of these amazing investors, you get to understand what real estate is trying to achieve, what private equity is trying to achieve, what the stock market is trying to achieve. Now, none of these are guaranteed, obviously. Got to get that compliance memo out of the way. But it gives you a really good idea because you're talking to the best minds in the world. But then on top of that, if there are certain investment sectors out there that you just aren't, you're just not vibing with, you don't understand it, you don't get it, at least you can now say, hey, I've learned from the best in the world, or one of the best in the world, on how this specific sector works, but I'm still not interested. I don't understand it. And you can cross it off, and you're doing your best due diligence for your personal financial situation. So that's How to Invest by David Rubenstein. Also, Dave, if you're listening in, we'd love to have you on the show. So this next one, for listeners that have been tuning in for a while, Adam Cecil has been on my show. I am not only a huge fan, he's become a really good friend of mine. So I got to give his book a shout out, Where the Money Is, Value Investing in the Digital Age. So this book slapped me in the face in the most positive way. And I'm going to tell you why. Okay. Before we do that, Adam Cecil is an amazing investor out of New York. He runs his own hedge fund. And he, frankly, indirectly has become a columnist because everyone was interviewing him after this book was written. And Adam, if you are listening, I hope you write another book because I loved it, as you can tell by all of my sticky notes and highlights. So what Adam realized early on was there are a lot of these businesses, and it's kind of within the title, value investing in the digital age. So there are a lot of these companies out there that are considered very tech-driven. And this is a little bit more technical, so you're going to have to buckle up for this, but I'm going to try to make it as simple as possible. So take a company that's older, like a traditional business. Take a company like, I don't know, Campbell Soup. There's nothing wrong with Campbell Soup. This is not an investment recommendation or any of that. It's just one that I pulled out of a hat. Campbell Soup is a traditional business. It's got factories. It's got products. It's got goods that it produces. It has shipping. It has a lot of things that are very tangible, that are real. They're not digital. So what Adam recognized for companies like that is Campbell Soup was created back in the day when generally accepted accounting principles were really solidified in this country. And so when you have a business that you own and you're doing analysis on, when you look at the income statement, which is what the company makes, revenue minus expenses is profit, if it's positive. And if not, you've got a problem. So a lot of these purchases that a business will have, factories, cars, like tangible things. What's interesting about that is when you buy those, you don't just take that whole expense in the same year. You actually can write that off over a number of years, in some cases as far as 40. So let's just throw some numbers up for you. Let's say that your business makes $1 million and you bought a factory for $500,000. But you get to write it off over 40 years. You're not taking that $500,000 deduction right up front in year one. You're taking that $500,000, dividing it by 40 years. And then you would take that periodically, and I'm trying to make this very simple for you, over 40 years. So your profit is going to look a heck of a lot better. Which, by the way, that's not like a good or bad thing. That's just how the accounting principles were made. Well, then comes along this new frontier of investing where you could invest in digital companies like Amazon or Google or IBM or whatever. And again, this is not investment recommendation. These are not investment recommendations. These are just companies I'm thinking off the bat. And I remember Amazon actually in particular was always considered to be valued incredibly expensive, and they weren't making any money and they weren't paying anything in taxes. And that last one, that's for another day. Well, what Adam recognized was these tech companies, they don't have these factories. They don't have these trucks. They don't have these parts. It's all digital. So a lot of these traditional things that you would go and write off and amortize over 30 or 40 years, because they didn't have all of that, their major expenses were in research and development and marketing, because with a tech company, that's where you live and die. Well, with research and development and marketing, you can't amortize that and write it off over 30 or 40 years. You have to take the whole thing in 1 year. So go back to what I said earlier. If your company made $1 million and you spent $500,000 in marketing, you can't take that over 40 years. You got to take that all in year one. And so because of that, your profit is going to be a lot lower. So Adam figured all this out, and then he started to understand that, oh, you need to use your own mental accounting when it comes to these technological companies. And then when you do that creatively, you actually get to unlock what the company's value actually is. And instead of going off of generally accepting accounting principles, which I would say are extremely outdated for a company like this, You get to see in the digital age what these companies value are actually valued at. And then you can compare them to traditional companies like a Campbell Soup or a Hershey or a Kroger or whatever the case may be. So I know that was a little bit long-winded, but that's really valuable for you to understand. That is what you are going to get out of this book. So if you have businesses that are within your portfolio and you're thinking, man, like, why are these businesses valued at such a high valuation? And does this even make sense? This book is going to be the book for you. I cannot recommend this one enough. So thank you, Adam. Now, another guest we've had on our show, and I've talked about this one a ton, he actually endorsed my second book out of the kindness of his heart, my buddy Gautam Baid, The Joys of Compounding. So this book is an absolute behemoth. I absolutely love this book. And yes, Gautam is an amazing hedge fund manager out of Atlanta. He focuses purely on India. That is his thing. But this book is not about that. This book, on the surface, Joys of Compounding, you're thinking, okay, this is an investment book. And yes, it is. However, it is a life book more than anything. Gautam took, and Gautam, if you're listening, you can comment or shoot me a DM on how accurate I am on this. Excuse me. I believe for 2 to 3 years, for 2 hours every night during that period straight, he committed to writing this book, which is insane to me. But you can also tell within the book, the detail that he has in his writings are, really, it's beyond impressive. Now, who is this book for? Excuse me. This book, frankly, I could go as far as to say it's not just for someone investing. It is for anyone that is trying to get ahead in their life. And that is qualitative just as much as quantitative. If you are into investing or you're a fan of Gautam's, you've probably already read the book. But if you're into investing and you have not heard of this book and you're trying to gain a significant amount of questions that you need to add to your investment process, this book is going to flip your head upside down. So Gautam, thank you so much for writing this book. It's had an immense impact on me. And I have to say thank you again for endorsing my second book. Now, this last one has nothing to do with investing, but it has everything to do with an absorption of knowledge, because a lot of you, and I fall into this category too. Have you ever gone through a book and you thought, man, that book was really, really valuable? And then someone asks you, what did you get from this book? And you're kind of stuck. You're like, I know there was value there. So then you may have to go back and reread the book, and you're just not absorbing the value in the book. I'm not saying you didn't read it, but you didn't absorb the knowledge. My dear friend, Nick Hutchison, who wrote Rise of the Reader, wrote this book to fill that void. So when I read this book, I did not go into it with the sense of, oh, I'm going to become a better investor. Frankly, I read for a living, whether it's investment reports, annual reports, quarterly reports, 13Fs, financial plans, articles. I read all day long. And I'd like to think, because I'm reading so much, you throw enough on the wall, some of it's going to stick. But right before this book came out, I actually told myself completely indirectly, I need to level up my absorption of knowledge. So when my buddy Nick wrote this book, I immediately snagged it. And I can tell you, I am absorbing more in a day than previously before this book came out I would have in 6 months. And I'm not exaggerating on that. So if you are trying to absorb knowledge in whatever field that you are in, but you simply, it's just not sticking, Nick has a ton of tips, tricks, and strategies for you to read and absorb. And not only are you going to do it, you can do this in as little as 15 minutes after you've read this book. Also, I got to give Nick a shout out as well, because he did endorse my second book. And actually his endorsement is on the cover of my second book's title page. So Nick, thank you so much for that. So that does it for the 8 books that everyone should read. And I wanted to sprinkle in some not traditional business, not traditional investment and planning related books. And so if you decide to pick all of these up, can I guarantee what's going to happen to you in the future? No, but I can bet my bottom dollar pretty heavily that if you read these 8 books, not only is your portfolio going to change for the better, your understanding of how to invest is going to change for the better. Most importantly, your understanding of how the world works is going to change for the better, and you will become comprehensively and infinitely more successful human being. So that does it for today's episode of the 8 books that everyone should read. As always, I am your host, Christopher A. Panayiotou, the Cap and Capitalize. And until next time, keep capitalizing. As always, thank you for joining me today. If you have questions about today's episode or any personal finance questions, please reach out to me at Cap and Capitalize on Instagram, Chris at capitalizeyourfinances.com, or via our website, capitalizepodcast.com. If you want more Capitalize Your Finances content, head on over to capitalizepodcast.com and check out our blog, free resources, book, and online course. As always, I'm your host, Christopher A. Panayiotou, Certified Financial Planning Professional, the Cap and Capitalize. And until next time, keep capitalizing.
The information provided should not be considered specific tax, legal, or investment advice and is not specific to any individual's personal circumstances. Each taxpayer should seek independent advice from a tax professional based on his or her individual circumstances. You should always seek counsel of the appropriate advisor prior to making any investment decision. All investments are subject to risk, including the loss of principal. This material was gathered from sources believed to be reliable. However, its accuracy cannot be guaranteed. This material should not be considered a solicitation of an offer to sell or buy any specific security or offering. Investors should consult a financial professional to determine whether risks associated with an investment in the shares are compatible with their investment objectives. Examples cited are hypothetical, are for illustrative purposes only, are not guaranteed, and subject to potential federal and state law amendments. There is no guarantee that you will achieve the results discussed or illustrated. Before investing, carefully consider a mutual fund's investment objectives, risks, charges, and expenses. To obtain a prospectus or summary prospectus which contains this and other information, call your financial advisor. Read the prospectus carefully before investing. Alternative investments may not be suitable for all investors and should be considered as an investment for the risk capital portion of the investor's portfolio. The strategies employed in the management of alternative investments may accelerate the velocity of potential losses. It is important to keep in mind that investments in fixed income products are subject to liquidity, interest rate, financial inflation risks, and special tax liabilities. Interest may be subject to the alternative minimum tax. Christopher Panayiotou is a registered representative with and securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. Capitalize Your Finances LLC is a separate entity from LPL Financial. Capitalize Your Finances is not registered as a broker-dealer or investment advisor. CRPS conferred by College for Financial Planning. The people and companies mentioned in this podcast are not affiliated with or endorsed by LPL Financial or Capitalize Your Finances.